Okay. So my name is Kath Britton, and I am the Director of Business Development for Women's Enterprise Center. This mentor advisory session is called Out of the Box Funding. And from this session, what we'd like to do is to see participants come away with an increased understanding of equity versus debt, and an overview of some interesting options for equity financing, as well as a few tips on how to navigate through the different types of crowdfunding. And first, I'd like to tell you a little bit about Women's Enterprise Center. So we are a not-for-profit organization, and we've been in the province for over 20 years. We support women entrepreneurs who are starting, growing, and purchasing businesses in BC. And we provide loans of up to $150,000. We have one-on-one complimentary business counseling. We have mentoring programs, as well as workshops and events throughout the province. So it's my pleasure to welcome the panelists, Julia Church and Jill Earthy. I'm going to read both of their bios, and I'm going to give a brief overview of equity versus debt, and then I'll start with some questions for the panelists. So I would also encourage you to think of some questions to ask Julia and Jill throughout the session as well. I do plan to keep the participants on mute while the panelists are speaking so that we don't have an issue with any background noise. But I will open it up to a Q&A at the end, or if you prefer, you can type in your questions into the chat section. Okay, I'm just going to do a test to see if we can hear Jill again. Jill?
Hi, Kath, I'm here. Can you hear me?
I can hear you. Wonderful. Great timing.
Okay. Thank you, everybody. Okay.
Okay.
Carry on.
So now, awesome. Okay, so now I'm going to go through the bios. So Julia Church is the owner of Nettles Swimwear. She has a background in management and sales, accompanied by a very creative and theatrical side. Nettles was founded by Julia in 2014 and launched with a crowdfunding campaign on Indiegogo that raised over $70,000 in 43 days. Nettles takes what is normally a mortifying experience, so swimsuit shopping, I think we can all relate, and seeks to make it better and much more inclusive by making honest swimwear for the everyday Canadian women right here in Vancouver. All of the brands of suits are fit to a woman from Julia's life, modeled by women who have never modeled, and donate back to the community. And since 2014, she has received some impressive coverage on BuzzFeed, Refinery 29, Huffington Post, and in the Globe and Mail, to name a few. Solely an e-commerce shop until 2015, thanks to the campaign, Julia then tested the brand in a collaborative physical retail concept on South Main Street in 2015. The brand soon outgrew the concept and launched its very own lifestyle shop in Gastown this past March, just a few blocks away from Women's Enterprise Center. So March 2017. So she it's become an e-commerce brand that has gone bricks and mortar. So welcome, Julia.
Thank you.
Okay, and now I'm going to give you Jill Earthy's bio. So Jill Earthy is the Chief Growth Officer for Fundr. She is an entrepreneurially minded leader with a passion for supporting entrepreneurship. After completing her MBA, she successfully built 2 companies, grew them nationally, and then sold them prior to joining Fundr. Prior to joining Fundr, she led 2 nonprofit organizations focused on supporting entrepreneurs through the provision of financing, mentorship, and education. And as a community leader and an active mentor, Jill serves on the board of governors for Simon Fraser University, and she's also on our board at Women's Enterprise Center. Jill is the co-founder of the Web Alliance, which is a collective of over 25 women's business networks. And she's pretty impressive. She has been recognized as a Business in Vancouver Top 40 Under 40 in 2010, Top 100 by the International Alliance for Women in 2011. She's been a finalist for the YWCA Women of Distinction Awards, and recently as one of University of Victoria's 25 Alumni to Watch. I'm sure she's had numerous other accolades, but probably too many to mention. So welcome, Jill.
Thank you, everyone. It's great to be here.
Okay, so now I'm going to talk quickly about the basics of equity versus debt before I go into questions from the panelists. So debt. Debt is when your company borrows money to invest into the business, but you do have to pay this money back. It usually comes from a bank or another financial institution, and you'll pay interest on that money, and you often have to have some sort of a security or collateral. So Women's Enterprise Center does offer debt. So we offer loans of up to $150,000 to women-owned businesses. But we do generally require security for the larger loans. So that's debt. And then equity is when someone invests money into the business. So the investor could be yourself. You invest into your business, your friends. It could be angel investors or venture capitalists or other investors. These investors give you money for your business in exchange for some ownership. So usually investors are looking for higher rates of return than you would have to pay if you were getting debt, which is why you might have heard that equity is often more expensive than debt. However, there are a lot of advantages of equity, and we'll hear about some of them from our panelists today. So off the top of my head, some of the few things about equity that are an advantage are that you don't have to make loan payments, so that helps with your cash flow. Since the equity investors have invested in your business, they do really want you to succeed. And often investors might come with resources, they might have networks, they might have different avenues for support. But these investors are often looking for higher growth companies, so just keep that in mind. And then before I start asking questions to the panel, I do also want to note that you can get a combination of debt and equity. It's not just one or the other. So both of our panelists have experience raising equity and have a lot of knowledge in this space. So I am going to start with asking questions to Julia about her experience with equity and specifically with crowdfunding. So Julia,
Yes.
Yes, I am so happy to hear your voice.
Yeah, it's so good to be here.
Can you please tell us a little bit about your business and how you raised financing for your business?
Okay, so I got the idea for my business kind of like a year before I launched it, and then kind of circumstances in life kind of led me to a place where I thought, I'm young, but I think this is a really good idea. And when you're kind of in that position, you don't have a lot of financial assets to your name. What I did have going for me was a really good community of creative people and my own creative mind. And so crowdfunding seems like the easiest vehicle to launch Nettles Tale. I kind of got my closest community together of photographers, videographers, a friend that did creative writing and PR, and put our heads together, built this campaign, and I needed very little money leading up to starting my campaign. Like, I can tell you confidently, it was like less than $10,000, and most of that money went toward product development. Because when you do crowdfunding, you're pretty much asking people to purchase in advance in support for your entrepreneurial concept. And I had a good enough kind of goodwill with my friends. It wasn't like, I think it really helps when you're crowdfunding to use your connections. Because I didn't have to pay I had an amazing video, but she happened to be one of my closest friends, so I didn't have to pay through the nose for it. She's someone that wanted to see me succeed. So yeah, and then we launching the crowdfunding campaign seemed very simple. It seems like the click of a button, to be honest. It's really just a lot of sort of fear and anticipation of seeing like how it's going to go. And it's not like you sit there passively for 43 days watching money, and there's a lot of work that goes into that 43 days. Like, 5 days in, we rejigged our campaign and set stretch goals to see if we could raise even more money. But was that kind of answer the question?
Great.
Yeah.
Can you So can you tell us about the platform that you chose and perhaps what, from your research, what the different options for crowdfunding are?
Oh, yeah, great. So basically at the time when I launched mine, my two options were really Kickstarter.ca and Indiegogo. The reason why I ended up going with Indiegogo, which is funny because to me, before I looked into it, like Kickstarter was everything. A lot of those successful campaigns I had seen personally before even developing a business concept. Like I always just thought of Kickstarter, and then I started to look at some campaigns, like especially locally, that had done very well on Indiegogo. Some great like local campaigns to look at are like Bestie. It's in Vancouver. It's like the sausage, like German street food restaurant in Chinatown. They had a really successful campaign on Indiegogo. Love Schools Leather. And so I started to look at their campaigns when I looked into Indiegogo more and realized that Indiegogo, and I could be wrong now, like Kickstarter, I think might offer this option as well. But at the time, Indiegogo had flexible and fixed funding. So what the difference is if you're running a campaign on fixed funding, the goal that you set for your campaign to make, you have to make all of the money by the end of the 43 days to receive any of your funding. Whereas if you have a concept like mine, where let's say I'd only gotten like 100 pledges and raised like $9,000, I could still take that money and get some swimsuits made. You know, it's not going to make or break my concept if I don't reach my financial goal. So I like the idea of flexible funding, just because my concept was essentially taking whatever money I got and turning it, using it for production and to make product. So yeah, those are two things to consider. And I think Kickstarter seemed more popular maybe like in the States, whereas I'd seen some successful Canadian Indiegogo campaigns. So it kind of encouraged me to change my mind and go the other way.
And can you clarify whether you did reward or equity-based crowdfunding?
Yeah, so mine was all reward. It was all perks. So my perks ranged from like a $5 like thank you note and coupon code to like I had one that was $1,000, and it would be you got your own swimsuit design and it got named after you and you got to be on the website. And in between that was just all the different suit styles.
Okay.
So you were purchasing a swimsuit.
Okay. Awesome. And then, so aside from providing you with the funds, like obviously, you know, you were giving away rewards, and so you got cash for your business. Aside from the actual cash that you got, how has crowdfunding helped your business?
Okay, so going into it, you think like all your focus is funding, and it was interesting to finish and look in the rearview mirror and realize that it was everything but the money. I mean, the money obviously was great, but there were so many things other than the money that I would encourage people to do, you know, something similar. If you have a successful crowdfunding campaign, like a lot of companies try for like 2-3 years to expand beyond the Canadian market. On our crowdfunding campaign, we had almost an even 50-50 Canadian and American customers. So already when you're done that 43 days and you move on to your e-commerce site, you've already like broken into the US. The other one was like when your campaign's successful, like how long does it take people normally to want to get featured on places like I was mentioning, like BuzzFeed or like Huffington Post or like lots of like local news. Like as soon as you start to become a successful Canadian crowdfunding story, they want you in the Vancouver Sun. It's just really great, intense, short-term sort of marketing exposure that's really hard to get normally for, you know, you're kind of making money while you're getting it. And then I'd say one of the greatest things for me was just the security that we had positioned and established ourselves in the market, that, you know, I didn't have to wait more than a year or 2 years again to see if there was a market for my product. I knew right away in 43 days that there was demand for the concept. that people were interested in it, and it was what wanted in the market. So that was a really good feeling too, to kind of build that confidence. And just a network, you know, you have a really solid initial email marketing mailing list of all of these customers that are already like a little, you know, tribe and support family that can kind of go from there. So yeah, all those things were huge benefits.
Oh, amazing. Thank you. We'll get back to you, but we're going to move over to Jill and ask a few questions to Jill, okay? Jill, are you still on the line?
I am. Can you hear me?
I can, very clearly. So I was hoping that you could tell all the participants a little bit about Fundr and how it's different from crowdfunding, the sort of traditional crowdfunding, and perhaps different from what Julia has experienced.
Yeah, absolutely. It's a great sort of building on what Julia was talking about. So Fundr is an online investment platform. So kind of taking the concept of crowdfunding to the next level and dealing with actually equity or debt. So we're a regulated financial services firm. That means that, you know, we work within the guidelines of all of the provincial regulators across Canada to make sure that we're helping entrepreneurs to access funding in the right way, make sure that they're structured, their business is structured in the right way. We do full due diligence on every company that we work with, and it's a very collaborative process just to make sure that each company is set up properly and that have the right structures in place. And then what is similar, so then identifying does the entrepreneur want equity or debt. Most of the companies we work with do issue equity, so people would invest through our platform into your business in exchange for typically common shares. We work with you on the valuation and set the terms around that so that it's very transparent. And I think that's really key. We're really trying to change the traditional financing model and make it more efficient, more transparent, and then more accessible so that you can engage sort of a broader group of investors. So on the investor side, once you've got everything in place and feeling confident, we have a number of touch points. So it's the due diligence phase, and then we have an investment review committee that also reviews that. So really trying to make sure that you're set up for success. And then where it does come in, where it's similar to what Julia was talking about, is it actually is about building a campaign and a story around your business. It's also about identifying the types of investors that you want to engage. So is it just angel investors or high net worth accredited investors, which is certainly an option. And so what Fundr does is provides another avenue for you to engage with that group of investors versus going around just to all of the different angel groups and pitching your story, which can sometimes be tiring. And you still need to do some of that, but it can be a bit more strategic. But then now with the new regulations in Canada, you can also add in the benefit of some smaller investors as well. So a lot of the companies, like everyday Canadians, that means any one of us, you can be an entrepreneur and an investor now. So the neat thing is that we offer often hybrid models where some companies just want, as I said, the high net worth individuals, strategic investors. But what's powerful is having some of those strategic or smart money investors and then topping it up with some smaller investors. So you get the benefit that Julia described of having your customers become investors or your investors becoming customers or increasing in your marketing abilities. And then there's ways to structure it so those smaller investors are in a group so they aren't getting involved directly in your business. I won't get into the details of that, but it allows you to have them there to support you along the way, but without getting too involved in your business. So it's a new concept in Canada, and we're excited because it's about unlocking capital that exists across the country, and it's particularly conducive for women entrepreneurs because it's around building that community of supporters at that next level. And so we tend to focus on helping companies raise capital anywhere between about $250,000 up to about $5 million. And Kath, to your point, it's really about collaborating on different sources of funding too, because like was mentioned, you don't want to give up too much equity early on. So identifying what are some potential debt options for you. Do you do a reward-based crowdfunding campaign first and test it, and then come to a platform like Fundr to further validate and get additional funding? I think it's really key to really identify what your funding puzzle is and how all the pieces fit together.
Excellent. Would you be able to give us a few examples of some of the types of businesses that have been successful on Fundr and why you think they have been successful, or perhaps if you're a business owner, what would make you think, oh, okay, Fundr might be a good option, or other crowdfunding might be a good option?
Yeah, so for our type of model, because the reason we sort of focus on companies raising at least $250,000 is because there are some costs involved in setting up the right campaign, in getting all of your documentation in order, in paperwork, and going through due diligence. So there is always a cost of raising capital, and I think that's important to factor in whatever avenue you go down. So for the companies that we tend to work with, we do work across industries. So we've worked with a craft brewery. We've worked with a children's clothing company. We've worked with some health tech companies, other technology companies. We just had a great woman entrepreneur. She has a company called ProTech. It's a security app, a personal security app. We even have some funds on our site. So you can you can have a product or you can have a service. The key is around having a story and a model that's fairly easily understood by a broad audience.
Okay. And what about being a high-growth company? Because, a lot of equity investors are looking to invest in high-growth companies. Would you say that would be typical of what you would see on Fundr?
No, not necessarily, and I think that's a key shift that we're seeing. So we do work with some companies who are planning, hopefully want to be acquired in the next, 3 to 5 years. Others who are potentially planning to go public. But we also have others, and this is what excites me, who just have a fantastic, business, a product or service that they're growing at a sustainable rate. And so they're very transparent about the potential returns for investors, that it's going to be a longer process. It could be 5 to 10 years. They're not looking for acquisition. They're looking to build a sustainable business that's going to provide some jobs and grow at the right pace for them. So I think that's the shift, and we're finding that investors that are coming to us are looking at different options. So they're choosing to invest in a couple that might be slightly higher risk, but may potentially have a return earlier on, and then others where it's a company you really believe in and you want to support that and put your money to work, but it may be a longer time period. Or other companies are issuing dividends, so they're not even looking to exit at all. They want to provide some sort of a lower return, but some return for investors. So there's quite a mix. It's an opportunity to build a fairly diverse portfolio now. And I think that's a shift too, because Kath, as you know too, my passion is also around engaging more women to actually invest and creating opportunities for women to come together and explore investment opportunities and take that first step. And maybe it's a smaller investment to start, but every dollar counts and trying to build a stronger community around that.
Awesome. And then you've explained a little bit about how Fundr, can be a combination of debt and equity, but can you talk a little bit more about how it works in combination with other sources of funding?
So we can just use an example of, let's say, a company, and I have some real examples, but I'm not going to share names at the moment, but $500,000, so $500,000. So we talk to Women's Enterprise Center quite a bit, and let's say Women's Enterprise Center can provide up to $150,000 in debt financing. So we would then look at that, and there's a couple of different ways, and we do this with other traditional lenders as well, where if the goal is $500,000, $150,000 is coming from one source. In some cases, maybe half of that would be released up front, and then the rest would be released contingent upon raising some equity through our site, so that it is very much a collaborative basis. So it mitigates some of the risk for the lender, the debt lender, because they know, okay, there's validation that people are also, investing in this business. So therefore, we'll release some more debt funding. Because I think it is about finding that right mix, as you said, Kath, because you don't want to give up too much equity early on, but you also don't necessarily want one. Sometimes you can't take on debt. You don't have any assets, or you can only take a certain amount of debt. So we really try to work in partnership with these different funders.
And I know from Women's Enterprise perspective, we need to see a minimum amount of equity. So we need to see a minimum amount of investment into the business in order for us to give debt to the company. So, so it can definitely be an advantage and a benefit for you to be raising equity for your business.
And we're going to see more and more examples of that because this type of funding in Canada has only been around for 2 years. So there's a lot of learning that's happening and a lot of educating. And so we're starting to now, with some traction, we've with the number of companies we've supported so far, we're seeing more examples, and we're going to see a lot more collaboration and traction moving forward.
Mm-hmm. Okay, Julie, if you have anything to add that you want to add, just pipe in here. I'm going to open it up to the participants to ask any questions that they have. The chat button, if you've gone on to the webinar and not just called in, the chat might be the best way to do it, but I'm also going to unmute all your phones, so you can just in and ask a question.
I was just in case anyone wants to ask that I have also loaned from Women's Enterprise Center and BDC and Futurepreneur, so I can speak to doing, if anyone has any questions about doing something like crowdfunding and debt financing, I can definitely speak to that.
And Julia, maybe you could talk about, did you go to crowdfunding first? Did you get your debt first? What did you do?
I did crowdfunding, and then I did debt financing. I'd say about 6 to 8 months later.
Okay, and was there a specific? There doesn't have to be, but was there a specific reason that you did one first and then the other? Did you want to test the market, or?
I definitely wanted to test the market and not be financially in the hole, if it wasn't, I definitely wanted to be debt free when I did my first production run and prove that, it was worth debt financing.
Smart.
Yeah.
Mm-hmm.
Okay, so we do have a question from the participants, and this one's from Jane Reitzma. She's curious to know if there's a preferred time of the year to start crowdfunding.
That's a good question. I think it depends a lot on your concept and product. So because I was launching swimwear, I wouldn't launch my campaign in September thinking that it was going to go well. So it was really important that I launched early enough in the spring that people could see that they were going to get their suits, hopefully with a good chunk of the summer left to be able to use them. So definitely keep that in mind. Other than that, I mean, people are on the internet every day. So I think you just really have to be specific to what your concept is.
Mm-hmm. And then from Fundr's perspective, is there a certain time of year that's best to approach Fundr, or?
I would agree with Julia, though. I think it's about your business and who your audience is. That's really critical to keep in mind. So we have a couple companies who are coming up, and they're going to launch in December because they want to sort of take advantage of the holiday season. So there's that type of idea. Others will look in the spring. I mean, if you have a seasonal product, then there's definitely things to consider. So we definitely work with each company and to identify what works. But on that note, I'm sure Julia would agree, but it's also about really planning in advance, right? It's like, Kath, I've heard you say this too, you never ask for money when you need it. You need to ask for it when you don't need it. And all of these types of funding take time, right? So just making sure that you are planning in advance. So if you're thinking you need the fund 6 months from now, you should be working on that now. And that ties into if you're going to launch a campaign of some sort too.
Yeah, absolutely. Any type of financing that you've got to really prepare in advance for sure. Okay, so we have a few more questions here. This next one is from April. Have you seen crowdfunding succeed in smaller communities or with tourism services? Mm-hmm. I'm not sure if it's a likely funding source for us.
I can answer that. So yes, is the short answer. We have been seeing more of that. We're talking to different smaller communities. We did see success. Persephone, which is a craft brewing company on the Sunshine Coast, had great success with this type of model. So it was an equity crowdfunding campaign where they were able to engage their customers to participate, and it was as much a marketing exercise for them, but it was really their community rallying around them to see them succeed. And that's an example of a company that, is grassroots. It's going to continue to grow, but it's not going to provide a large financial return anytime soon. But they'll offer dividends. So it's a different model, but very community focused.
Okay. And Julia, do you have anything to add, or?
Yeah, I was just going to bring up I know it's not tourism, but Bestie again, that restaurant that I mentioned. I think they didn't raise tons of money. They didn't need to raise, I think their goal was 10 and they raised 15. But it's not a global concept, right? Someone in Toronto isn't interested in getting a gift card to a German street food restaurant in town. So it is a beautiful example of how, local communities do really care about small business, and what a great way to just build that community where you need it. So I wouldn't underestimate the power of it just based on who you want your target market to be.
Okay, thank you. Okay, we have another question. It says, it's from Julie. I have a bricks and mortar business that requires a leased space. Is it a challenge to secure funding before you find the right space for the business? And I can take a stab at this question and then turn it over to you ladies. So from my perspective, lending from Women's Enterprise Center, it's it's a bit of a chicken and egg. Sometimes we can give sort of conditional financing, assuming that you find a space that is similar to the square footage and location and price that you had in your business plan. But we definitely need to see eventually a signed lease in order for us to disperse any financing.
Yeah, I would jump in. So it's a hard timing, but there are some programs available for some companies who are still finding a space. But I agree, especially from my perspective, investors will want to see that there's a space and that business is starting to proceed. But that's where potentially friends and family should come in to support.
Yeah.
I think with leasing space too, it can be hard. It's you're talking about fixed costs. Mm-hmm. So it's hard when you're funding and you don't have the cash flow history to prove that you can sustain the fixed cost.
Yeah, I mean, often landlords, it's hard because landlords want to know that you are going to be able to pay for the lease. Yeah. And they often won't sign a lease if you don't have your financing in place. And likewise, you want to have a financing subject in your lease to make sure that you get the financing. So it's a bit of a chicken and egg.
Yeah. But that's where maybe if it's a bricks and mortar, depending on what you're planning to sell, then you could do a reward-based crowdfunding campaign to validate that and raise some funding maybe up front.
Mm-hmm.
A great idea.
Okay, so we have another question here. Okay, so I guess it depends how it is arranged, but does the company need to share financial statements or any report every year or in a certain period to the investors? Let's say you have 100 people investing. Do we need to send it out to each? Or is there a platform to send out all at once? How does this work after getting the investment? And I bet it is a little bit different from Front Fundr's perspective versus, say, a reward-based crowdfunding. So perhaps, Jill, could you start?
Yeah, absolutely. Yeah, great question. So if you are bringing on a large number of investors, there's an obligation to communicate to them. So what we do is we work with our companies to make sure they are setting up regular communication. There are systems available, and we partner with a few of them where it's very easy to send out at least quarterly communication, if not monthly. Depends on your type of business, and we have different templates that we share around what that looks like, because it is essential. With regards to the financials, for us, it depends on which type of, I won't get into the legal jargon too much, but there are certain prospectus exemptions which we use that do require annual audited financial statements to be done. There are others where you do need to provide, if you're depends on which groups of investors are engaging, but typically you would just need to send out those high-level financial numbers when you're reporting to investors on a regular basis. You're not doing a full report or sharing your full financials, although investors do have a right to request additional information. And then I think the other part of that question, I'm kind of working backwards in it, when you are actually raising funds through a platform like Fundr, all of the information is in a secure environment. So investors can come onto our site, they can express interest in a particular company. They then need to sign on and answer a series of questions so that we can validate their identity and which type of investor they are and which types of investments will be suitable for them. So there's quite a process. So there's a true vetting. Then you can choose if you want, if they can access their financials once they've signed in, or you can have, in some cases, they can sign an NDA in order to access those. So there's a number of layers of security around that. I think if that covers it all.
Okay, and Julia?
Yeah, I mean, if you crowdfund, you don't really owe anyone after any information after that other than just their reward. So if that is, something that you're not in, it's a perk.
Okay, so less onerous on that side of things.
Yeah, definitely.
Can you actually elaborate a little bit on reward-based financing? So does the reward always match the amount invested, or how does that work?
So I think crowd campaigns put it different ways. Like some people, some campaigns offer a lower price on what the retail price of their product's actually going to be after the crowdfunding campaign is over as incentive. We didn't charge shipping or taxes, but our prices for our swimsuits were very true to what the prices are for them now. And you have to keep in mind you are going to owe, like that was kind of something we hadn't thought about at the end, was the taxes, like on what's sold. Did we owe taxes on what was sold to American customers, even though it was a crowdfunding campaign? We had to that was logistics we didn't think about until afterwards. And also Indiegogo and Kickstarter take a cut as well. So it doesn't end up being obviously the full amount that is seen by the naked eye when you go to the crowdfunding campaign page. So yeah, all things to consider, but at the end of the day, you do get, after all of those kind of cuts and expenses, whatever amount you charged for your perks in your bank account.
And would you be able to expand a little bit on your experience with, what percentage the platform takes?
Yeah,
Mm-hmm.
It was, I think it was 7%.
Okay.
It was about 7%. So they're, they encouraged me, of course, they wanted to keep my crowdfunding campaign open. They're going to put a little bit of pressure on you if you have a successful campaign to extend it. But I think it's good to keep in mind there's probably a sweet spot too where people are kind of going to burn out, Mm-hmm. So you kind of want to keep interest and not necessarily give into that and take that value away from that onto your own e-commerce site, because you don't owe anyone commission on that site, right? So move over to that platform while it's hot.
Mm-hmm. And Jill, from your perspective, from Fundr?
So our fees. So
Mm-hmm.
we charge a small upfront fee to cover all the due diligence and setting up of we sort of create it. So another difference between us and Kickstarter or that sort of thing is we actually work in collaboration to create a marketing strategy and a campaign with each company that we work with. So we charge a small fee, and then we do charge between 5 to 8% off what comes through the platform, but we're facilitating all of the paperwork, onboarding of all of the investors. The entrepreneurs have access to a dashboard to see the status. So it's very much, we're like the back end support team during the capital raising. So we reduce legal. You still need a lawyer, but reduce legal costs and make it way more efficient. So.
Right. So now this question is from me to the panel. Because I do get this question a lot on preparing for financing, for raising money. So how do I prepare for raising equity? If you guys could just let the participants know what you think that some of the most important things are to prepare.
I can take that first.
Yeah.
So I think it is about making sure you understand all of your options. So consider all of those. So I think preparing to raise equity, your company needs to have a bit of traction, to have a story to tell if you're going to be bringing on external investors. But make sure that you're not, as I keep saying, giving up too much too soon. So make sure you just assess all your options and know where they fit in. And then make sure you map out your timeline, and not just now in the next 6 to 12 months, but beyond. Like, where do you see your business growing in the next 2 to 3 years, even 5 years? Because I think, especially when you're opening it up for external investors, you now have these people along with you for the ride, which can be really powerful and positive. But you need to be looking ahead. Then you need to make sure you have your structure in place. And understand your valuation, that's tricky because it's a very subjective piece. So make sure you talk to lots of different people about what your valuation is. Make sure it's in alignment with the market. And like anything, we all put so much blood, sweat, and tears into our businesses and think that it's worth a certain amount. But I think the key is really, like anything, it's what the market will bear, and your company's only worth, unfortunately, what somebody's going to pay for it and invest in it. So there's a middle ground there, but that can take a bit of time. And I think my number one thing is make sure it feels right. If you're going to bring on external investors, make sure that you're bringing on the right group of people, and make sure that you have all your documents in order, because investors of any size or type are going to want to look at the ins and outs of your business and to be organized as possible and make sure you have the right support team around you. I could go on, but those are some key things.
Maybe, and perhaps maybe a little bit of patience, because nothing happens overnight.
Absolutely.
And I'm not sure if you touched on a pitch deck. Did you mention that?
Well, that's one of the tools. So we have, and I'm happy to share any of these types of templates, but we do have, we have a due diligence checklist, and so one of the items on that would be a pitch deck. That's essential, whatever type of investor or financing you're going after, right, is your story. Also, you do need to know your numbers, both, where you've been, where they've come from, and where you plan to go with those too.
And I've heard people talk about this data room. So basically, investors want to see pretty much every document. So contract, certificate of incorporation, tax returns, all these things. So to make sure you have those all lined up and ready to be able to show.
Absolutely. And I'll just touch on that too. So those are all really essential pieces. And so some entrepreneurs set up using, Box or Dropbox or something, a secure data room that they can direct investors to. One of the other benefits with Fundr that we do, so we would need to review all those documents during our due diligence process, and then we actually would then set up an extra secure data room for each company so that you're not having to individually send out documents or send that link. That's actually something that we would help facilitate as investors come in. So it's just an added benefit. But putting all of those, and as I said, I'm happy to share that checklist because it's a useful document as you're thinking about fundraising.
Okay, wonderful. Thank you. And Julia, anything else to add on preparing for raising funds?
Yeah, sure. I just wanted to say I'm also loving being a guest on this and hearing Jill's answers, because I just wanted to say, no matter what stage your business is at, this kind of is never something that gets put to bed. You're always thinking about different ways to, raise value, equity. So, yeah, I just wanted to say that. It's awesome to hear you talk.
I would say, complicated thing. Sorry, go ahead.
Yeah, I was going to say building a really solid business plan and constantly kind of reworking that business plan and simplifying it, because, they often talk about, the elevator pitch, right? It's you only have the amount of time that you're in an elevator with someone to, communicate the concept of your business. But I think there's definitely some truth to that. Just knowing, what is your business's mission statement, what's its vision, what's its core values, and what is the business model, put very straightforward and simply and in as few words as possible. And then I would agree with knowing your numbers. And I think it's just really important as you're running the operations of your business to not let that kind of slide, to just set systems in place on a daily basis where you're constantly reviewing, making sales goal targets, and kind of knowing, if someone in a coffee shop, for example, was how much money did he make last month? it's surprising how many business owners can't answer that question. So yeah, I think knowing your numbers and your margins as well, like your cost of goods sold or whatever that is for the industry you're in, is really important. And then I would just say more specifically for crowdfunding, you definitely want to develop a really good pre-campaign plan. Mm-hmm. So like we tried as hard as we could to get at least like 1 ounce of PR coverage. Like no one's really willing to cover you until your campaign's launched. But if you can get at least like some PR coverage pre-launch, and then also driving all of those people in your first and second connections and your network to your campaign, like before it's launched publicly. So we launched like privately for 24 hours and just like went hard direct messaging all of the people in our network, being like, if you believe in this, if you want to support us, like we ask that you do it in the next 24 hours. Because it is a psychological thing when strangers then go to the campaign and they see that it's already raised $3,000, mm-hmm. but it's only been up for less than 24 hours. That's really powerful. And then the second one is just have a really good delivery plan for your campaign. So making sure that you're not over-promising and under-delivering. So if you think, oh, I'm going to get these guys their rewards in July, just say they're going to get them at the end of August, and just give, or even September, like just give yourself a buffer there to kind of over-deliver and surprise people. And then also just a plan for retaining your campaign afterwards. So what are you going to do with like all the email addresses you just required and all the people that you now have their contact information and their attention? So.
Great advice. Thank you. So I have one last question before we wrap up, and this is from April. We have always been unsure about how much control or input investors would want, which is a bit of a deterrent. Can you tell me more about how this works?
Yeah, I can take that. Another great question. So I think that's where it goes back to finding investors that are the right fit for you and that have a vision that's aligned with you. And different investors are motivated by different things. So I think that's why it's like a dating process, especially with some of those larger strategic investors. So make sure you're clear on your vision and what you need, what you're seeking in an investor besides just money. If there's some strategic expertise that they bring to the table that you can benefit from, and if so, and you've sort of outlined what that looks like, sometimes if they write a big enough check that they could earn a seat at your board. Others are just wanting to be along for the ride and just support you and have the opportunity to invest in an early stage company that they maybe love the product or service. So there's different motivations, and it's important to understand what those are and what the right mix is for you. Because some want control and others don't. So you need to really be clear on what you want before giving up any control.
Okay, great. And anything to add, Julia?
I'll just kind of plug debt financing. Something positive that I've found about it, even though it's an equity question, I'm going to come full circle here, I promise. It's that mentor I got connected to through Women's Enterprise Center and Futurepreneur. I kind of got funded by them together. Is so amazing. I still meet with him, and I often think, like, I got all of the value of a super solid like mentorship relationship without having to give away any equity. So not to devalue one or the other, but it's like I have been able to find that without having to give away equity yet. Yeah.
Awesome.
And that's such a great point, Julia, because I think that's really key. And I think sometimes, I'll just put in this, sometimes as women, I'm generalizing, but we tend to undervalue ourselves. And so, I mean, you've all built these amazing businesses, and I would love to hear more about them. But, this is your business, your baby, and, there's certain things sometimes you need to give up to grow, but just be true to why you started the business and where you want it to go. And you're in the driver's seat. So you have options. There are lots of great options out there and lots of people who want to support, so you can find the right people to get involved.
Awesome. I just want to say a big thank you to Julia and Jill for being, you guys are so knowledgeable and you are supportive and honest, and thank you for sharing with us. I love the fact that you guys both have different experiences, but you have some overlap. So I appreciate everything that you've shared. Thank you. So, and after this webinar, we will send out some information to you. I'd ask that Jill provide, hopefully Jill can send out the checklist, or we'll send it out on her behalf, and then we'll send out information on how to contact Nettles Till, where their bricks and mortar shop is, that sort of thing. So thank you, panelists, thank you, participants. I hope you enjoyed this session.
Thank you, everybody, and thank you, Kath and Women's Enterprise Center, for organizing and being such a credible resource for women entrepreneurs.
No problem. Okay. Take care, ladies.
Thanks, everybody. Bye.